Hello and welcome to another edition of the Richard Haynes Real Estate Show. I'm your host, Richard Haynes of Haynes Real Estate, here in the South Bay of Greater Los Angeles, where we cover Manhattan Beach, Redondo Beach, Hermosa Beach, and the Palos Verdes Peninsula, specifically residential and home sales here. I'm excited to have you all on. It is October 10th, 2023, and we're going to have a solo microcast, so to speak. We are going to deliver the information a little bit faster than normal so that you guys are getting it through a fire hose. And then, of course, if you want to check my weekly blog posts, you can read more deeply on the numbers and what we're going to be providing today. In this week's episode, we are going to be covering just two topics. Number one, Q3 numbers in the South Bay housing market. You guys, this was such a big report. I'll tell you why in a moment. And topic number two, I'm going to share with you guys my deal of the week. And every once in a while on my weekly blog, I will write a deal of the week. And it's something we can deliver within a couple days' time, and people see what's actually going on in the market and a potential great deal. I normally don't cover them here on the podcast because typically it takes us a little bit longer to produce these, get these out, and then oftentimes a listing is sold. But for this one, it's actually being marketed for the next month, and you'll have an opportunity to get after it if you do agree with me being it a deal. So without further ado, let's get to the topic. So you guys, topic number one and the big topic, quarter number 3 results here in 2023 for the South Bay markets. You guys, this was a massive report. I was looking forward to these numbers because the last 3 years due to the pandemic, we've had squirrely comps and numbers all the time. We had the worst spring 2020, which is normally our hottest time, because COVID hit and the market got frozen essentially. And then you have 2021 where things are hot in the summer and the winter because there's this massive demand. No one bought during the spring, so those numbers are skewed. Then you have 2022 where interest rates start rising crazily in the second half of the year. And now we're at 2023 where things are maybe finally settling into, we're past COVID, seasonality's come back to normal, and we're now in a 12-month period where rates have been elevated or rising. So this report was so massive, you guys, because we now have this scarce inventory, but super high prices and low affordability and historically high rates over the last 20 plus years. But we now have a Q3 of 2023 to compare to a Q3 of 2022 where seasonality is back to normal, rates were higher, and we were already in this scarce market. So this is a true apples to apples comparison, and it's really going to show us if buyers can withstand these high rates, high prices, and if sellers have the same leverage or if they're losing it or gaining more. So enough about how important this is and how it's apples to apples. This is going to give us one of the best glimpses into the marketplace we've had in a long time. So let's jump into it. Before I get into the numbers, if you want more detailed numbers or you want to absorb it a lot more than what you have in the past, go to haynesre.com/blog. Check out my post at the beginning of October with these numbers and you can dive in. But I'm going to start off first and foremost with Manhattan Beach. Manhattan Beach, Q3 median prices down 19.2%. You guys, the 19.2% number is really scary. What I'm actually more focused on, I'm not worried about Manhattan Beach being crushed by 20%, but more of that this is the fourth quarter in a row that Manhattan Beach has seen median price declines. And this big price decline down from kind of the tail end of 2022 starting to fizzle with rising interest rates is showing that there is now an official trend. Manhattan Beach median prices are falling. They've been falling the last 4 quarters, and there was a big dip in Q3. because of high interest rates, high prices, even among really scarce listings here in this city. You have prices falling. There is very little inventory, but buyers are essentially throwing up their hands. So Manhattan Beach is down. When you look at a rolling 12-month average of median prices in Manhattan Beach, it's not so bad. It's down 12%, but it is still down nonetheless. Moving on to the Palos Verdes Peninsula, you have Palos Verdes Estates down 6.9%. And again, you've got PVE down 4 quarters in a row, just like Manhattan Beach. So the same trends in this marketplace. When you look at Palos Verdes Estates rolling 12-month median price to smooth out those numbers, it is down 9.2%. So again, Palos Verdes Estates is mirroring Manhattan Beach. Manhattan Beach and Palos Verdes Estates at one point had the highest median prices in the South Bay. They were very similar, and both are now pulling back 4 quarters in a row, and it's confirmed by the 12-month rolling median price. Rancho Palos Verdes is down 14.1%. And again, down 4 quarters in a row, you guys. Do you get this trend now? Rancho Palos Verdes rolling 12 median prices to smooth those out. Again, it is confirmed down 5.7%. So MB, PVE, and RPV, some of our biggest marketplaces outside of Redondo Beach, all down 4 quarters in a row with the rolling 12-month confirming their prices. Rolling Hills Estates, the one bucking the trend. They are up 4.5%, and they've now been up 2 quarters in a row. So not enough to confirm a trend, but Rolling Hills Estates was down those other 2 quarters if you look 4 quarters back. And when you look at its rolling 12-month median price, Rolling Hills Estates is actually down 20%. So there's still some squirreliness in Rolling Hills Estates. You're probably bored of this, but you always hear me talk about Rolling Hills Country Club skewing the numbers. Then loads of small condo sales over in the estates are selling finally after COVID, bringing prices down, and now those are subsiding a little bit. So still a little bit of squirreliness in Rolling Hills Estates, but up 2 quarters in a row, quarter over quarter on a yearly basis, and then, of course, the 12-month median price rolling average is down. I don't do quarterly numbers on Rolling Hills behind the gates because there's just too few sales, but if you look at at Rolling Hills 12-month rolling average of median prices, they are up 3.7%. And the interesting thing about behind the gates is that they surged early COVID, and then as we pull back from COVID, Rolling Hills got crushed and came down hugely, and now it seems like they have flattened over the last year. So it's found its footing. It was overvalued during COVID because everyone wanted room and space and huge estates. Then it got hit really hard at the end of 2021 and 2022, and now it seems to be flattening out right around the mid-4 range. So 4.5 feels like the median price in Rolling Hills, and that's probably where it will be for some time. Moving on to Hermosa Beach, Q number 3, up 2.7%, you guys, and then the rolling 12-month average in Hermosa is down just slightly, 1.1%. So Hermosa Beach is really kind of flat. And what's interesting is that quarterly numbers have kind of been flat the last few months anyway, or the last few quarters, excuse me, and Hermosa's been slow and steady. But Hermosa was appreciating at a little bit faster clip. 2.7 isn't huge, and the rolling 12 down 1.1 isn't really huge either, but it kind of feels like Hermosa's plateauing, and it will be interesting to see if it can buck the trend of Manhattan, Palos Verdes Estates, RPV, and get back to growth, or is it flattening out and could fall a little bit because of high prices and interest rates? We need more data on that. And then finally, moving on to Redondo Beach. Remember, this includes also Hollywood Riviera that has Redondo Beach P.O. boxes because It just takes too long to do the numbers. I'll sort it out one day where we give you true Redondo Beach. But Redondo Beach Q3 median prices down ever so slightly, just down by 0.3%. So basically flat. And then it's rolling 12-month median price average up flat 0.9%. So essentially, Redondo Beach is flat, but what I will tell you is Redondo Beach has been up the last couple of quarters, so this one's kind of been strong, hanging in there, so to speak, for such a large city, and it really is a diversity of really affordable condos and townhomes, all the way to $5, $7, even $10 million homes on the Esplanade and the bluffs of Redondo Beach. So there you guys have it for the numbers. I will make some commentary on sales. Now, everyone's talked about how there is such scarce supply. Well, sales have fallen due to scarce supply, but what I want you guys to know is normally falling sales are a negative to the market. It means there's less buyer demand. And a year or so ago, I could buy the sales falling argument because of scarce supply. But we are still low on sales. They're up ever so slightly this quarter, but when you expand it out historically, Redondo, Hermosa, Manhattan, and the PV Hill, everyone is at historically low sales when it comes to almost historically for the areas. So all-time low sales numbers, or all-time low sales numbers going back to the Great Recession when things were very ugly in our real estate markets. So sales have continued to stay low. Yes, they're up 5% from a year ago on a quarterly basis, but they had fallen 40 to 50%. So we're doing about 40 or even half the sales what we are used to in the markets. And even though there's scarce supply, as low sales volume continues, that ends up turning into a demand problem. So I'm still buying that scarcity and fewer listings out there are part of the reason why slowing sales, but we have to start giving credit to slowing sales being a negative for the market. So we've got negatives in prices for the most part going down in our local South Bay cities, or they are flat in Hermosa and Redondo. So in my opinion, this is a pretty ugly report, or at least a negative report showing pretty strong weakness throughout the South Bay, and that our markets simply aren't immune to record pricing, all-time low affordability since the Great Recession, and all the headwinds that buyers are facing in today's market. So that's the quarterly report, guys. If you really want to dig in, check my blog, haynesre.com/blog. We're going to move on to topic number 2 before we wrap up. The deal of the week, or the deal of the week that came out yesterday, October 9th, that we're now tracking. You guys, this is a Palos Verdes Estates property going on the auction block. You guys, this is a true auction property. And not only is it an auction property, this is not a, poorly located property on a busy street or in an area that is less desirable. This is on Paseo del Mar in Malaga Cove, one of the most desirable street addresses in the entire city of Palos Verdes Estates. It's also in Malaga Cove, and it happens to be on the bluff side of Paseo del Mar. This property, it's incredibly difficult to get single-family homes at a great price on the bluffs of Palos Verdes Estates. This is an auction being held by Flans Wiener, which is an auction company that's been around for decades. I bid at quite a few of their auctions back during the Great Recession in the Valley, South LA, and other areas where REOs and short sales and auctions were happening. They did this in a big, big way, and they have been hired to auction off this sale. And it's a trust sale, or likely some sort of will, or someone died intestate, or whatnot, but someone passed away. It's getting put up to the auction block for an efficient sale, and you guys, you got to look it up. 809 Paseo del Mar, Palos Verdes Estates. It is a 2266 square foot home on the bluffs. Go look at the pictures. And it's only asking 2.495 million. 2.5 million for a bluff property in Malaga Cove is unheard of. You guys, if we break down the stats even more, it's a 20,000 square foot flat lot. It is a flag lot, so you drive down your driveway between other properties, and then you have a private home and estate on the bluffs overlooking Bluff Cove, actually, and some beautiful Pacific Ocean waters. $2.5 million is a steal. That comes out to $1,100 a square foot. Whether it's in amazing condition or so-so condition, it is a great deal. The way Flans Wiener runs their auctions is they typically have a month to a month and a half marketing process, and you guys, you have a month to study this one up. It has a public open house Sunday, October 29th from 11 a.m. to 2 p.m. for you to get your eyes on it and run your numbers. Then another public open house a week later on Sunday, November 5th from 11 a.m. to 2 p.m. for you to do more research. And then the auction will be held in person November 12th at 10 a.m. and they will give one last 30-minute window to see it at 9:30. You guys, this is how they run all their auctions, but you need to be a shark on this. You need to do your homework. You need to pull title and make sure that you see all the issues. You need to go down to the city to see if there's any open permits. You got to check for mechanics liens, all sorts of risks, and then you're showing up and registering in advance for the auction and bringing cashier's checks. So you need to be prepared. This isn't you just write an offer, they accept it, and you open escrow. You are going to have to bring some cold, hard cash that will be at risk if you do not close. And oftentimes you need to be cash. I haven't looked at the details of the Flans Wiener website. I haven't talked to one of their representatives yet, but you have a month to do your homework on this one, just to give you an idea of how good of a deal it actually is. The last bluff sale at the lowest price on a so-so location was on PV Drive West, right before you go into Lanada Bay. This property was 2,800 square feet, so just about 600 square feet larger. And that sold for $4.5 million on the MLS, you guys. This auction is asking for $2.5 million. It is $2 million lower and only 600 square feet less. And I will argue it's in a better, quieter location. And so a $2 million spread from the lowest, somewhat comparable comp is massive, you guys. This is going to go over asking and is a huge opportunity if you want the lowest hanging fruit on the bluffs and one of the lowest hanging fruit single-family homes in a long, long time in Palos Verdes Estates. And then just to give you an idea, property on the bluffs right now, one right down the street in Malaga Cove, it's obviously much more significant, but essentially its neighbor at 4,800 square feet at 709 Paseo del Mar, just 100 block or 100 over, is asking $12 million. So those are your neighboring comps, you guys. So this is an outstanding opportunity. 809 Paseo del Mar, look it up online, check the Flans Wiener website, and you can be represented by a realtor. So if you are interested in bidding on this property, I've done it before myself, flipping homes, and you can be represented by an agent as long as we help register. And part of my job for you to earn that commission is I help you through all the due diligence, from title searches, from mechanics lien searches, from open permit searches, and everything you need to do to study up. And we bring in contractors and all of our people that give you an idea of costs, risks, etc. So if you're interested, give me a call. 310-756-5588 is my cell, or send me an email, richard@Haynes, HAYNESRE.com, and we can help you out registering and underwriting this potentially amazing opportunity on the Palos Verdes Bluffs. So there you guys have it. Hopefully under 20 minutes here, the Richard Haynes Real Estate Show microcast. We covered Q3 numbers in the South Bay that are weak and a very good indication that things may be slowing down in the South Bay. And then, of course, this auction property on the beautiful Malaga Cove bluffs of Palos Verdes Estates. If you've got some cash you want to put to work, this is an incredible opportunity, and you should take a look at it. You guys, happy fall. Wishing you a wonderful Halloween with family and friends, and we will see you next time on the Richard Haynes Real Estate Show. Take care.